Hello, everybody. Welcome back to another episode of The Market Close. It is Friday, August 23rd, 3:46 p.m. And I have just one thing to say before we get started. I have been in plenty of holes in my life, and Jackson's is the best. Jackson's hole was the best. Today at Jackson Hole, Jerome Powell said the things that we needed him to say. He said the things that the market really hoped he was going to say. And not only did he just say them, he said them enthusiastically, he said them adamantly, and he said them in a way that basically made it seem like, hey, if you don't think a rate cut's coming, you're wrong, or you did not listen to what Jay Powell had to say. And the markets obviously have reacted to what Jay Powell had to say today at Jackson Hole. Take a look at IWM, up 3.03% on the day. Small caps catching a bid. Why? Because when rate cuts come down, that's obviously good for small caps. S&P 500 up about 1% on the day, 561.26. Not bad. Even Snowflake up about 0.48%. TNA up 9%, triple leveraged. On IWM, Kava up 20%. This one just went absolutely crazy today. AMD's up 1.32%. Robinhood is up a nice 6%, topped out at about 21.20 on the day, right now at 21.12, and not bad for Robinhood. To close above 21 would be very, very bullish for Robinhood. CrowdStrike at 270. We've got Uber that's up at 74. Bitcoin. We'll talk about Bitcoin. I don't think there's any headlines outside of the fact that rate cuts means more liquidity. More liquidity is good for Bitcoin. Bitcoin up 5% in the past 3 hours, 63,766, doing very well for all the Bitcoin proxy plays. Rocket Lab at about $7 at 698. You got Tesla up at 220, NASDAQ up 1%, and then you got Nvidia right here up at 128, 3.6% on the day. The only one that's kind of lagging is Palantir. I think that's just because Palantir has had, a really, really good past 2 weeks, one of the best stocks in the entire stock market over the past 2 weeks. So it's probably taking a little breather today, but that one's down about 0.69%. Everything else in the broader market is pumping pretty strong today on the backs of what Jay Powell said. So what did Jay Powell say today that is helping the markets? Oh, by the way, besides Jay Powell, RFK Jr. officially dropped out, and he has endorsed Donald Trump. Now, technically, he didn't literally drop out. He only dropped out of swing states. I feel like this is so stupid. I don't know why he didn't just drop out completely. But, he'll still be on the ballot in California. He just won't be on the ballot in, Ohio. So I don't know what the point of that is. But at the end of the day, this is basically saying that he wants Trump to win. It's kind of hilarious. He ran as a Democrat originally, has refused to engage with the DNC. He kind of butchered the entire DNC on his suspension speech that he gave just about an hour ago. I think it ended maybe 20 or 10, 15 minutes ago. And he said, I throw my support behind Donald Trump. He probably is going to get some type of cabinet position, I would imagine, from the Trump administration. We saw that video that got leaked a couple weeks ago of them two talking on the phone after the assassination attempt. So I would imagine RFK is not going to be gone from politics in general. And he'll have a vital role in the Trump administration. But that is important for Donald Trump, taking up those voters in swing states that were going to vote for RFK. I don't know if it definitively moves the needle, but it definitely moves the needle to an extent. And if markets price that in and they price in a higher Trump victory, or a higher chance of a Trump victory, then obviously that is good for the markets if they want lower corporate taxes. So that's what we got today, literally just before I went live. Now, Jay Powell. Let's talk about what happened with Jay Powell. We'll have Steve on at, I think, 4:15-ish. So Steve will be on. He will talk about all the things that he's been wanting to talk about. I was on the phone with him a couple hours ago, and he has some very interesting thoughts about a wealth tax. So you'll get to see Steve and his opinions of that. And then we'll talk about the broader market as well. Now, Jay Powell. Jay Powell said things, for those that are wondering why the market's up right now. It's because Jay Powell said everything the market wanted to hear. And because he said what the market wanted to hear, that's why we got some more momentum in the broader stock market. So let's read some quotes from Jay Powell that he said that are important to understand. And let's also read to what he didn't say that's also important to take a look at, because some of the stuff he didn't say leaves open the room for 50 basis points of a cut. I don't think we're going to get 50 basis points of a cut. I think we're going to get 25. But if the economic data in the context of September in terms of the unemployment rate is really bad, then he left open enough of a window for him to cut by 50 basis points. So a couple quotes by Jay Powell. The cooling in the labor market conditions is unmistakable. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon. We do not seek or welcome further cooling in labor market conditions. No, this was a big one. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Basically saying, hey, I mean, literally, the time has come for policy to adjust. He is not talking about if we are going to do a rate cut. He is talking about when. And when he says the direction of travel, the directionality of when that rate cut is going to come is based on the data. Essentially, that data is pretty much one piece of data to me. I don't even think it's CPI. It's in September. If unemployment is way higher than expected, like we saw on August 2nd, which caused the 10% drawdown on August 5th, that's where the Fed would probably cut by 50 basis points. I think 25 basis points is very healthy. I think it's admitted they have. I think it's not admitting that they have fell prey to the problems of a weaker labor market. Basically, that they haven't been defeated yet. But if you get a bad September report, they're probably going to do by 50, and maybe the markets will be fine with that. Finally, he says, we will do everything we can to support a strong labor market as we make further progress towards price stability. Notice he keeps talking about the labor market in all of those quotes. He's not talking about inflation. There was a portion of his speech where he talked about inflation, but the primary thing he was talking about was how they beat inflation, which is very different from what he talked about in 2022. In 2022, he said, expect pain, expect the fact that we have inflation that is not transitory and it's becoming rampant. Back in June of 2022, we had 9.9% of the CPI. Now that's just below 3%. It seems like they've solved that problem. The Fed President Bostic was also on CNBC today and basically said, we literally cannot wait just for inflation to come to 2%. So another point insinuating, same thing that Goolsbee said on Sunday, hey, it's time for us to focus on the labor market because unemployment is rising. And if the labor market is our main focus, then it looks like we're going to get a bit of a cut. So bullish day, dude. Bullish day. JSaw says right here, his speech killed, dropped truth bombs, 100,000%. I don't think there's anything more dovish you could have asked for from Jay Powell on that speech. And he needed to be dovish. I mean, we lost 818,000 jobs. We're all seeing weakness in the labor market. The labor market to me is not deteriorating, it's weakening. And because it's not deteriorating and it's weakening, I think there is a chance for the soft landing. Now, as bullish as I am and as bullish as we've all been today, let me add a little bit of color to the bullishness because I think this is important to remember every time we see things that are super bullish, and that is this right here. So this is what the Fed is up against. After you see this chart, you're not going to be able to not see it again. So just this is what the Fed is up against. This is why I've said for the past 8 months, if Jay Powell can pull this off, greatest Fed chair of all time, and everyone needs to send him a gift card because it is what he's going to do for our portfolios would be incredible if he can pull this off. What you're looking at right now is a chart of every time the Fed officially cut rates. The S&P 500, most notably in 2001, fell 39% in the next 448 days after that cut. In 2007, fell 54% in the next 372 days. Unemployment rose by 2% in 2001 when the Fed cut rates, and it rose by 5.3% in 2007 when the Fed cut rates. These red circles are every time the Fed cut, and then the blue line is the unemployment rate. The gray line on top of the blue line, that is a recession that has happened. And as you can see, pretty much happens every time. Now, why would this not happen this time? Well, there are examples in which this didn't happen, aka September 1995, aka 2018 into 2019, which we talked about as well. And in general, we are in a different economic cycle where growth is better than before. And the unemployment that we're getting, although it's similar to unemployment that we've had in times before when we've done the rate cut, that unemployment might be quelled by the fact that we are lowering rates. And this is one of the times where we have rates at the highest levels they've been in 40 years. We haven't had a situation like this in 40 years where rates were so high, yet the economy, theoretically, just looking at the stock market, GDP growth above 2.5%, was strong as well. Now, this is one chart to kind of go against that, but there is a counter argument here. So for those bringing up 1995, 1998, and 2019, which is the thing I just brought up, in 3 of those examples, all 3 of them, unemployment was trending down. And in 2019, unemployment was at a 50-year low. So every time when unemployment was trending up, which it is right now, 3.4 to 4.3, and we saw rate cuts, which is what we're going to see in September and November, it led to a sell-off in equities, and that led, obviously, to a lot of volatility. Will this time be different? And again, don't shoot the messenger. This is just the broad data, right? This is just what has happened in history. And so The reason I've been on the Jay Powell cheerleader squad is because I think Jay Powell has really navigated the economic momentum in a very sophisticated way after Biden and Trump printed trillions of dollars. I think that puts us in a unique situation. I also think, to hedge back against some of the historical arguments when it comes to unemployment, we have never printed this much money and raised rates this quick, which meant we had tons of anomalies. What was one of those anomalies? Well, the 2-year and the 10-year inverted, and 2022 was the recession, but we didn't really get that catastrophic collapse, which is why pretty much every analyst was wrong in 2023 and 2024. This is how I think Dan Ives and Tom Lee basically made a name for themselves over the past couple of years, because they went against the trend and they said, hey, even though the yield curve is inverting, we don't give a fuck, because we think the broader market is strong enough and earnings is good and tech is strong. So in all of those examples that I've shown in the past where we raise rates, unemployment is trending up, we cut rates, unemployment is trending up, and then the S&P falls because unemployment continues to trend up. Why does the S&P fall when unemployment continues to trend up? Because consumers lose their purchasing power. If they lose their purchasing power, companies have bad earnings. If companies have bad earnings, obviously the stock market falls. Will this time be different? I think it will, because the growth from the AI thematic is already taking us forward. I think small caps in general are going to catch a bid because they're going to get more momentum in terms of the cost of capital to finance their debt. And overall, I think the labor market is going to be able to not deteriorate, even if it continues to weaken by the time we cut by 75 bips. And if we cut by 75 bips, I do think that is ultimately going to be what makes this time a bit different from before. And again, the reason this time is already different is because we printed so much money. We raised rates so quickly. Like, already it feels like this time is just a whole different macroeconomy because of what has happened over the past couple of years. Nonetheless, we'll deal with those problems when we deal with those problems over the next few months. But so far, the trend is up. It looks like we're going to end August on a pretty strong note. I mean, we have another week left of August, but at least on today, it's good. And, money market funds still have $6.24 trillion. We saw $30 billion was added to money market funds yesterday. If that money decides after listening to this speech, hey, it's time to come in, I would really like to see a decrease in money market funds next week. Because if we see that decrease, then we probably know people are beginning to come into the broader market. We got 2 minutes until the market close. I did it, folks. Today was cheat day for me. We got a waffle. I was here in the morning. I said I had a dream about a waffle. This is the one thing about me that's also maybe not the healthiest. When I have a subconscious thought, I really go try to make it real. And so when it comes to food, when it comes into my head, it's a fucking dream. By the way, this waffle with this powdered sugar and this syrup. Someone said this was mayo on the side of it. I almost threw up when they mentioned that on Twitter. It's not mayo, it's butter, okay? But I don't put butter on my waffles. I'm not a butter type of guy. Reminds me of mayo too much. No, I'm just kidding. But this waffle was one of the best waffles I've had in my life. I don't know. It's because I really wanted a waffle, and so that's why it was kind of a placebo effect to make that waffle like the best waffle I've ever had. But it was quite literally one of the top 5 waffles I've ever had. And it was great. And it was paid for with paper gains, the portfolio was looking all right. So I said I could dish out $25, including the tip on that breakfast. And so hopefully the paper gains will continue to pay it out. Someone was saying that Elizabeth Warren's going to want 25% of that waffle in unrealized capital gains before I eat it. So that was funny. But nonetheless, great day, great market. It seems like the momentum is here. Small caps pointing in the right direction, markets pointing in the right direction. And Jay Powell said what he had to say. And as a result, the market is moving higher. That wasn't IHOP. That was actually a diner called Perkins, local in Jersey. It's called Perkins, not IHOP. IHOP is not as good as like a local diner, at least to me. There we go. 4 p.m. Friday, August 23rd. The stock market is now closed. All right, here you go. S&P close at 562 on the day. 562.16. There we go. Is Perkins a national chain? I thought it was only in New Jersey. Oh, wow. You guys know about Perkins. Okay, so it's not just New Jersey. I thought it was in New Jersey. I didn't know it was a national chain. All right. Well, Perkins is great. It's pretty affordable. The waffle was fantastic. Customer service is amazing. I love Perkins. That's awesome. IWM closes up 3.16%. If we look at the chart on the monthly for IWM, there you go. The top was 228 on July 31st, bottomed at 196, and then slowly made its way back up tier to 220. TNA triple leverage IWM up 9.4% on the day. Robinhood ends the day up 6.18%, $21.12. The market somehow gave us an opportunity to buy this sucker under $14 on August 5th. And shout out to those who took advantage of that opportunity. Now, for those asking, hey, do I sell? I bought Robinhood at 14. I'm thinking of selling, taking profits. You have to have a sort of a broader perspective, right? If you bought Palantir at 20 and you see it at 32, I know it looks awesome to sell, but at the end of the day, if you really do believe in a long thesis, then I think selling at 32 is not the smartest thing. If you want to take some profits here and there, then sure. Obviously, you got to do what you got to do. But overall, I think Robin is a position to go long on. I think it makes a lot of sense. I think it will have volatility in the coming months as the market has volatility. Robinhood is no stranger to volatility in conjunction with the market. However, I think just their growth alone today, like a day like this must have printed God knows how much revenue for Robinhood because you had a ton of people put money into Robinhood. We had one of my friends on Twitter drop in $100,000 into Robinhood, got $1,000 for dropping in that $100,000. And you got a ton of people that probably bought some options, and Robinhood makes a crap ton of money on those options. So from that perspective, there's that 100,000 transfer. I think a lot of money probably came into the platform with deposits. I think they got a lot of volatility. Although there's going to be volatility in the share price, the actual earnings growth, I think, is going to be incredible and probably get closer to 40% number in Q3. And so that's why I think Robinhood will continue to do well. My fair value is 25. We'll see if that happens by the end of the year. But Robinhood, amazing day for them. Grinder up 1.22%, 1244. Where did Palantir end on the day? Palantir 31.77. Again, the reason I think it's red is just because it's had a hell of a past couple weeks. I don't think there's any fundamental reason unless a bunch of insiders sold again. I'll check in a second. But outside of that, I think Palantir just it's been going up and up and up. You would imagine it takes a little bit of a break. And today people might have sold some Palantir, bought some other stuff, right? And that's probably why it came down a bit today. Nvidia 129.37 basically got all of the gains that it lost yesterday. So Nvidia, great day for Nvidia. We saw Matt in the morning. He bought a crap ton of Nvidia, 200 shares. So he FOMO'd into Nvidia before going into earnings. Snowflake 115.82. Snowflake ended the day up about 0.53%. AMD at 154. Let's look at the Mac 7. Oh, Apple announced the iPhone will be unveiled on September 20th, and the watch and a bunch of other new stuff will be unveiled on September 10th. I don't know why they just don't do it all at the same time, but they're going to be unveiling their products in early September. And so that's probably going to be good momentum. Here's my argument for why September might not be as bad. We looked at a chart this morning. Every September has been horrible for the past 4 years, down 4%. I think there's two arguments. Number one, even if we go down 4%, I think that's just a buying opportunity. And I think the broader market will recover towards the end of the year. So like, if you really want to time it and get out today and then try to get in on bottom in September, like be my guest, that's a little bit too much stress for me. But I do think that things will be okay, even if we go through that 4% downturn momentum. And then number two, if we're getting a rate cut and we're getting a ton of tech news, like this Apple upgrade cycle, Nvidia earnings is right before we start September, maybe September is not as volatile as it usually is, or maybe it's only down 1 or 2%. It's not down 4 or 5%. I think September will be like a down month just because every single year since 1950, it's been a down month. But I don't think it has to be that down as people may think it is. And maybe it surprises to the upside and we actually go up given we have a rate cut and we have more earnings momentum. Nvidia right here, 129. Tesla was up about 4% on the day, 220. Amazon was 177. Meta, 528. We had some news that they're stopping their Vision Pro competitor, which makes sense to me. Google at 167, Microsoft at 416, and then Apple right here at 226 on the day. What about a Black Swan event? Yeah, that is very possible. Black Swan event is very possible. I don't know what the Black Swan event would look like because it's obviously a Black Swan event. But anything could happen, and that obviously could hurt in September as well. I think now the big thing is this election cycle. And this election cycle is going to be everything. That's why RFK dropping out today endorsing Trump was a really big deal, because I don't know how the markets are interpreting Kamala. I think the markets will digest the Kamala victory, and I don't think the stock market has to collapse or anything, but I do think they would be really happy by not paying 28% corporate tax rates. And S&P right here at 562. If that's the case, then, if RFK Jr. helps Trump win, then maybe that helps the broader market. But I don't know. So I think the next big major volatile event, given rate cuts are pretty much solidified now, is going to be the election. And a lot of the volatility is going to lead into what happens with the election. Bitcoin definitely wants Trump to win. Why? Bitcoin might have gone up also because RFK endorsed Trump, and obviously Trump is very pro-crypto. If the market is pricing in that Trump has a better chance of winning because of RFK endorsing him, RFK, crypto, Trump, crypto, that might be playing into crypto. I think the rate cut is, again, the bigger reason why crypto is getting a bid. I don't really believe this crypto pump, quite frankly. because it's been a while since we pumped on crypto, and every time we've pumped in the past couple of days, it just got rejected. So over the weekend, we'll see how liquidity dries up and if it has more momentum to keep going. But it's nice to see us in that mid 60,000 range. The BitX puts that TJ and I sold today, those are doing great. And I think those are up like 20% already. BitX right here, double leveraged fund against Bitcoin. Yeah, that's at 31.40. That's basically at our covered call price. Our covered call is 32, so almost in the money on those. And that's because Bitcoin is continuing to gain momentum. How did the Black Swan event get its name? Did a swan that was black cause a lot of problems in history? That's a good question. I actually don't have an answer to that. I would imagine something like that probably happened, but I don't know. SoFi closed above 750. Yes, that was also a big deal. SoFi was fighting for 750 for a while. 752, amazing action on SoFi, 4.59% up on the day. Where did PayPal end? Was PayPal green? Yeah, PayPal was slightly green, 71.70, not too bad, but PayPal was green. What about Celsius? Celsius was green, even though it's still below 40. SMH was up 2.46% on the day. That's a semis ETF. Anovix was up 3%. Short QQQ was down 3%. So today, if you wanted to hedge, this was a good day probably to buy some just as a hedge when things get weaker. But overall, the Bears, at least on today, cannot claim victory. Maybe next week they get to claim victory. But for today, Jay Powell said what he had to say, and the market interpreted it as bullish. Now, for all the people saying, hey, as when we get into a rate cutting cycle, it's going to be bearish. And like rate cuts in general are bearish. I understand that argument. My only perspective here is that if the GDP growth is strong, which we've seen by all measures, Q3 is going to be above 2%, and unemployment is not rising so rapid to the point where we're getting close to 5 or 6% unemployment, which that might happen, but we're not seeing any evidence of that yet. Then I think a rate cut, as crazy as it is to say, dude, it's the same thing everyone's been talking about for 10 months. It will create a zone in which, as the market falls, the rate cut will be there to catch it. And then if it falls further, another rate cut will be there to catch it. And that will stabilize prices and employment, which will create a wonderful soft landing. And if Jay Powell does it, everyone is going to make a lot of fucking money. The economy is going to be in a really good position, and he'll be the greatest fetcher of all time. So we'll see. We'll see how it plays out. But I still think it's going to be a couple volatile months. And if it ends up working out right, then we'll get some momentum. Arlie says, I bought leaps on Hood up 60%. That's amazing. Yeah, if you took advantage of Hood at 15, 16, 17, I think you're doing pretty well. And now it's just a question of getting back to that 24.50, 25 level that I think it's probably fairly valued at. Amid pricing in how many basis points cut? So the market's pricing in 100 bips by the end of the year. I don't think they're pricing in 50 in September. They're probably pricing in 25, but they're definitely expecting 75 for sure. I think we're going to get 3. I think, again, the only reason I think we're going to get 3 is because the labor market is something that I'm not just obsessing about. The Fed, dude, the Fed. Like, if you read the transcript of Jay Powell and Bostic and Goolsby talking over the past 3 days, like, if just read it yourself to like really understand it, like every 5 minutes they're mentioning the labor market. They're not mentioning CPI or unemployment or any of this stuff. They're talking about the labor market. So that's the easiest way to figure out what they're obsessed with. And they're obsessed with, honestly, I think Jay Powell's obsessed with his legacy. He knows he got transitory wrong. He's recovered pretty flawlessly from that position. For as much as we want to hate on him for it, like, he's been able to manage really high inflation without turning us into Venezuela and keeping growth up. Now, ChatGPT really he should definitely send a gift card to Sam Altman, because if ChatGPT did not become a thing, then maybe this wouldn't have happened. But he's been able to maintain momentum. And so if he is concerned with making sure that he ends up not being a horrible Fed chair, then he has to make sure employment is stable. And the only way to do that is to lower rates, to encourage businesses to actually hire people and spend money and create the flow of capital that exists within our society. The problem is when you do that, people will grow more, people will spend, people will consume. That will hurt inflation. But if inflation's dead, if it's done, if it's gone, if we don't have to worry about it, then you can cut rates relatively quickly. And it doesn't have to be that big of a concern. Now, the Fed obviously is always lagging in cutting the rates. And that's been the biggest bear case for the market going up, which is that the Fed is going to take too much damn time, which they probably already have. But today's press conference solidified that they are ready to cut rates. And that seems like it's going to be a broader good thing for the market. Do people feel ethically conflicted supporting Robinhood? No. No. If you feel ethically conflicted supporting Robinhood, I hope you, I hope you, I don't even know, dude. Like, dude, there are a lot of things I stress about in life. Supporting Robinhood and owning Robinhood stock, like, no, I've never for 1 second been like, do I need to challenge the ethical? Like, no, dude, never. I've never given 2 fucks about owning Robinhood stock. And if it's about the GameStop situation, then feel free to stay up at night about that. I mean, if you own like Lockheed Martin, I could understand, right? Like, I don't judge you if you own Lockheed Martin, but I understand like thinking about that investment, or like some private prison stock. But no, not Robinhood. Put that in the chat. Does anyone own any tickers that they have ethical concerns about? Put in the chat if anyone has them. I had that with Palantir back in 2021, but then when I actually researched and learned about them, I was like, oh, this is stupid. Like, I'm not gonna like feel sad at night because of people thinking that the government having technology to defend themselves is bad. So for me, the whole Palantir unethical thing, that I had that phase for like a month. I did research and I was like, oh no, I'm fine with it. But if anyone owns any tickers that has any ethical implications, let me know in the chat. Disney, well, that's one. I can understand that. I mean, especially if you're a parent and you care about how your kids are being exposed to media, I can understand that. Cigarette companies, yeah, like Steve, whenever he hops on, we'll talk to him. Altria Group, I used to ask him this question, like, do you have any fears of owning like a cigarette company? He does not give a fuck, dude. Steve does not care. And he has owned Altria Group for a long time. What else? What Google? Okay, I could see that. The woke stuff, I get it. I personally don't feel that, but I could understand how other people feel it. Raytheon, that one I can see that as well. Boeing, that one I could also see. Now, the thing about Boeing is, as much as I don't like them as a company, and they've had really, really shitty malpractice with their CEOs, management team, etc. At the end of the day, we all have to fly somewhere, right? And so if we have to fly somewhere, then we're going to have to use an aircraft manufacturer that's Boeing or Airbus to get us on those planes. I would just hope that there's enough pressure for them to not every time and actually have real quality control. Because I think the problems on the 737 MAX have been quality control problems. That's been the biggest problem on Boeing. Meta, this one I've never felt, but I know how other people feel about Meta, so I respect it. Zucks is not really the most ethical to a lot of people, so it's fair. It's fair. TJ in the chat, we forgot to buy 500 shares of Palantir. Yes, we forgot to do that. So TJ's trying to build up 5,000 shares of Palantir because he's probably going to get 5,000 called away on that $12 call he sold last year. So next time TJ hops on the show, guys, you got to remind us to buy 500 shares of Palantir. We got to do that 10 times basically to build up back to those 5,000. Okay, let's take a view on small caps and where we think they're going, and then we'll keep going from there. We'll be on for like another hour and a half, folks. Let me text Steve. I just sent him the link. He should be on probably in 10 minutes, and then we'll get his thoughts on everything going on in the markets.
Stocks climbing again today with some of the more defensive corners of the market trading at highs. You've got staples and healthcare, 2 sectors that are hitting all-time highs during the session. Joining me now to share how he's investing through the end of the year, Kevin Dreyer, co-CIO of Value at Gabelli Funds, also oversees the Gabelli Asset Fund. So you've got some value-oriented opportunity here.
Yes, I think so. I mean, we are bottom-up investors. We have a value style. And obviously, growth has really led the way for a long time now. But you started to see this rotation in early July, and that was in line with looking at what we're all talking about today. And that's the Fed finally cutting rates. And we've seen value and small caps start to do better. And we think we're poised to capitalize on that.
It's hard not to get overwhelmed by the headlines of, like, since August 5th, you've got Meta up 17%, Amazon up 16%, Apple, Microsoft, Alphabet, NVIDIA. Those mega cap names that have driven us through the year are going back in, grabbing the spotlight again. Why should investors consider at this point something that is more value oriented?
Well, I think one thing to note is that as rates come down, that tends to lead to an upswing in M&A activity. Mm-hmm. So we just had an announcement of Mars buying Kellanova, for instance. Food stocks have had a tough year. The consumer stretched, inflation's been biting them, so they've been struggling with volume growth. But snacking has been a good area within food. So Mars is buying Kellanova, which the former Kellogg, they split up into 2 pieces, their cereal business, WK Kellogg, and then Kellanova. So we think there could be other deals to come in that sector. My favorite is Bellring Brands, BRBR, which is kind of a mid-cap stock.
Known for Premier Protein shakes?
Exactly. Premier Protein, they're growing mid-teens right now in an industry that's struggling to grow at all. We've got mid-teens growth.
I didn't know the parent company of Premier Protein was public. That shake is growing rapidly, dude. We have so many of those in my house. My mom drinks those every day. So I got to take a look at that ticker. That's interesting. That one is definitely, I know you guys see it everywhere. That one's growing really fast.
Most of their distribution through Walmart and Costco. So they've got a big distribution opportunity. And we think they'll continue to do great on their own, but somebody else might want to buy them too.
What about Campbell's Soup?
Yeah, so Campbell's is an interesting situation. In this case, they just recently did a deal. They bought Sovos Brands, which owns Rayo's pasta sauce. Again, very fast growing. So they're doing a good job on their own, but now they've got a meals business that's a little better situated and then a snacking business. So they could end up following that Kellogg-Kellanova playbook. We'll see. They've got an investor day coming up in September, so they're going to outline their plans going forward.
You know, it's a meaty narrative to look at the rise of the GLP-1 drugs and the impact, especially on snack foods or packaged foods and things like that. Are you discounting the impact of weight loss drugs on this sector?
We're looking very closely at it. That has been a narrative over the last year or so, definitely. I don't think there's really been an impact yet in the numbers. I think it's been more just the inflation, the consumer stress. But that's where a company like BellRing with Premier Protein, they're actually a great GLP-1 companion because people need protein when they're on these drugs and to avoid muscle loss. So that can be a great product to use and convenient.
I'm looking right now at the Russell 2000 on track to close today, up more than 3%. Talk a little bit about the opportunities in the small caps.
Yeah, I mean, we see a lot of opportunities in small cap stocks, I'd say across the board. Right now, they trade at a massive discount to their large cap peers. We're an all cap manager, so we look across the capitalization spectrum. But I would say that, yeah, by and large, we've been buying more small caps lately, and we think they've got a long way to go.
We have consumer confidence data coming out next week on Tuesday. Do you think that will set the tone for investors in some of these other areas that are so exposed to consumer discretionary?
It could. I mean, my sense is the consumer is pretty weak right now. I mean, I know we've had kind of mixed data coming in over the last couple of months, but it kind of feels like it's lower. So I just think that portends for rate cuts, which now we all know are coming. It's a question of how many and how far do we go, and we'll see.
I cover gambling.
All right, folks, it looks like small caps are catching a bid. Obviously, a lot of people are excited about small caps. Tom Lee, this has been kind of his thesis for a long time. And based on the announcement today by Jay Powell, it is all but solidified that rate cuts are officially coming. All right, it is Friday. We know what it is on Friday. It's 4:19, so I'm not going to bring up our contributor on stage until it's 4:20, because why wouldn't we introduce him exactly at 4:20? Because that's always appropriate to introduce our favorite guest contributor on the show, the market close, the guy that you guys want to hear, the guy that should take over my show when I'm in India, and I should give him the keys to the channel and just let him do the market close every day. Even though he would see one comment and start talking about it for 40 minutes and probably not be able to move on, but which would be hilarious. But still, our favorite contributor. Damn it, why isn't it 4:20 yet? Why? I'm waiting until it's that 4:20 so I can announce it right at 4:20. This is the longest minute ever, dude. Like, why is this minute so long? Ladies and gentlemen, we have the guy, the one that you all love, the person that you care about, the person who has some hot takes and he's ready to spit some fire at 4:20 p.m., Mr. Stephen Fiorillo.
I don't know why you're saying I'm going to have hot takes and spit fire.
Because you always have hot takes and spit fire, and that's why people love you. You have good takes on the broader stock market and the economy.
I think it's just common sense, but okay.
Well, that's fair. That's fair as well. Steve, how are you? How's been your week?
Great.
So the one thing between me and Steve this week is we have not been able to get on the phone. He's called me like 5 times. It's just been so fucking busy. So finally I got to call him.
Yeah, and Amit's ears must have been ringing because as I'm talking to somebody, he decides to call me. What are the chances that I'm on the phone with Chris when Amit calls?
And then we had a group call. It was great. I didn't plan. I didn't know you were on the phone with Chris. I just called you.
Yeah, no shit.
Dude, I called you right after the market closed or the market opened. I was like, all right, I can call Steve, And you were on the phone with Chris as well. We got a lot to talk about, Steve, a lot to get into, a lot to discuss. I want to start off with the Fed, obviously. What was your reaction to the Fed minutes, J Powell, the BLS revision, all of that stuff?
Yeah, I mean, I listened to it when I was working, and once again, it's common sense. I think that they are moving too late. I'm glad that they are actually acknowledging that it's time to move, and I think this is going to be good.
Do you think the BLS revision of 818,000 jobs was significant enough to push the needle in one way or the other in regards to rate cuts in the broader economy?
No.
Why?
Regardless if the revision was flat or quarter mil or where it came in, I think they were getting cut regardless. I just think it allowed them to have some cover and say exactly what they said. I mean, I just don't think that they could have held rates longer. They could have, but I think it would have been drastic if they did.
Some of the people in the Fed FOMC minutes said that they campaigned for a July cut, but it wasn't unanimous. Do you think there are some presidents that really feel the Fed is missing the boat here in terms of cutting?
Yeah, I think there's people, just like anything. You can put 10 people in a room and you're never going to have 100% agreement on every issue. So right. I'm not surprised about that at all. Everybody has a different take on what's the right move. And I don't think anything is malicious. They just have different opinions.
Okay, let's talk about NVIDIA before we get into one of the things we talked about a little bit ago. 129.37 up 4.55%. Good friend of the channel, Matt Money, bought 200 shares this morning. You've been buying more. Next time we'll talk, earnings will be done. So by next Friday, we'll be recapping earnings. What do you think is going on with NVIDIA?
I was close. I almost bought more today. It went up and went down. And when it went down, I'm like, maybe it'll sell off even though Powell spoke. And then it just kind of did a round trip. And we'll see what happens on Monday. I mean, I'd like to get more. I don't know if I really want to average up at this point, but I may buy more on Monday if it doesn't come down. We'll see.
How convinced are you on a scale of 1 to 10 that NVIDIA is going to be one of the most valuable companies on the planet?
Well, the way that you just worded it at 10, because they are one of the most valuable.
Okay, let's say the most valuable company on the planet. So let's say 4 trillion, 5 trillion above Microsoft and Apple. Because that's the opportunity cost, right?
Yeah, I think it's a coin flip, 50-50 at this point. Could they overtake them? Sure. I mean, they overtook them at one point this year, but for a long duration of time, look, it could happen. It could happen this year that they could shoot up after this earnings if they give solid guidance.
So let's talk about that. So the street wants 28 billion on revenue. Or 26 billion. What do you think they're actually going to put up?
I haven't even looked at crunching the numbers. I'm waiting for their earnings report to come out to crunch the numbers for the rest of the year. But just based on Amazon spending $30.2 billion in the first half on CapEx and them saying that they're going to spend more in the second half, and you see that the bottom line on Meta's outlook went from 35 to 37 billion for the year, and Microsoft saying that they are going to increase spending and the majority is going to go to GPUs and CPUs for the AI build out. You got to think that they're going to come in around those numbers. I mean, their revenue keeps growing, so I'm not going to be surprised. I'll be surprised if they miss.
So someone says the name, dividend streams, and being bullish on NVIDIA don't really match. Can you explain?
Why can't people invest in different types of things?
No, they can, but most dividend investors would not touch NVIDIA.
Okay. Pays a dividend?
It does. It has a 0.01 cent dividend. You're right.
Pays a dividend. And if you write covered calls on your position, then, that's generating income too.
Are you currently doing covered calls on NVIDIA or no?
I was going to, but I'm like, you know what? This thing is such a monster. I'm just going to wait until the end of next week. And on next Thursday or Friday, I'm going to start writing covered calls on my position.
Right.
Because if it jumps 15, 20%, I might as well just wait a week and get bigger premiums and miss the whole having a roll.
Is there any world where you think NVIDIA earnings goes wrong? Like if they
Yes.
don't beat and raise?
Yeah, they could miss. I mean, I don't think they're going to. They absolutely could miss. And look, if they miss and if their guidance isn't as good as what everybody is anticipating, it could tank. I mean, I don't know about tank, but I think you could see NVIDIA lose a significant amount of value and the market go down 5% or so.
Yeah.
NVIDIA is very important right now.
Yeah. That's fair. That's fair. I think they're going to beat and raise. And if they don't beat and raise, then we're all screwed. So this is one of those things that
I just don't think that they have competition at the moment.
Jose is a big NVIDIA shareholder. He joins as soon as I ask a bearish question. He was in NVIDIA since $20. That's his average cost. And he just started. Yeah, he just started buying again on that dip to 100 because even he felt, given the growth estimates, that averaging up is not crazy when it fell to 100.
Yeah, I mean, look, we averaged up on Meta. You know, we bought when it sold off after the IPO. And I mean, I'd have to look at that account, but I know that we bought again, I want to say around 70 and probably around 120 again. So, no, I think NVIDIA still has a year or two of runway left. I really am looking forward to this quarter. I want to see what they say, but the way that it looks from everything I've read, especially the utility companies, I think that it has another year and a half of solid growth before we start getting into the boom bust cycle the way DRAM goes. But okay, I could be wrong. This quarter is very important.
So let me ask you a question. I think that there is a bearish setup going into Q3 for the Mag 7. If they spend too much and there's no ROI and the street gets upset, or if they start spending a little less and then the street starts thinking AI is not as big of a deal to them if they're cutting on CapEx.
One, who cares what the street thinks?
Well, I deeply care what the street thinks because that affects my wallet. I think that's very important because that affects the stock market.
Here's why.
Stocks that we own.
Got Amazon wrong, didn't they? They keep getting Amazon wrong.
No, I get it. But my point is here. My question was, do you think...
I get what your point is.
No, I didn't even ask the question. My question is, do you think Jensen...
You did ask a question.
No, I didn't.
Yes,
The question is, does Jensen on the call have to calm everyone down around CapEx spend being too high or too little? Because I think the street's freaking out too much about that.
Who is anybody to judge, except for the shareholders of the company, if it's too much or not? Because these are the companies that are going to develop and harness and write the record on what AI is going to be used for. And if they feel that this is what they need to do to get to where they want to get to in the next 5 or 10 years, then ultimately they are accountable to their board and their shareholders and nobody else.
I agree. I just think if Jensen gets on the call and he just takes a moment and he like subliminally says, hey, give us time and give our friends, Microsoft, Amazon, Google time because it's coming, just like wait. Then when Microsoft spends a little bit too much on CapEx and then the shareholders get upset because there's no ROI, they can remember Jensen's words about give them some fucking time. You know what I mean? Because right now, I don't want to go through another Q3. Personally, I don't want to go through this where Microsoft spends a little bit more on CapEx than expected and the street freaks out and then tanks them 10%, which is what I think.
I rode Meta down to 88 and told everybody this doesn't matter. It's a blip. Don't go crazy. Where was Meta? Think about how much it went down. It doesn't matter in the grand scheme of things. If you're worried about 6 months or 12 months, don't invest.
Well, I get it. I get in the grand scheme of things, it doesn't matter. I'm just saying for protecting 2024 gains and having the actual bull rally at the end of the year, we can't have the street freaking out about CapEx. Because if they do, we're going to get so much volatility that it's going to be ridiculous.
CapEx doesn't matter. Profitability matters and growth matters. This is where the next phase of growth these companies feel is going to be derived from. And this could be bigger than cloud computing. So you don't have at the moment another segment of tech that could be as important as SaaS models or cloud computing was.
Yeah.
So I think everybody needs to stop speculating and just let what's going to happen and let these companies build what they need to build. And they're either going to be correct or they're going to be incorrect. But remember, they're not tapping the debt markets to build this stuff.
Yeah.
So in the grand scheme of things, it doesn't matter.
I agree. And I think that the biggest point you just made is that there is not a revolution of growth in technology outside of AI. Mobile happened, cloud computing, it's still happening, but it's not in its infancy. So how are these companies going to grow? Like in America, we need growth, right? If there's no growth, these companies are done. And so if they're investing in the next leg of growth, I think the market definitely has to be patient and kind of let them do that growth. Okay, let's talk about another topic. Get this out of the way, and then we'll get into some other stocks.
I have a feeling I know where this is going.
I was going to ask you, are you a waffle guy or pancake guy? That was going to be the topic. Are you a waffle guy or pancake guy?
I mean, why choose?
That is a very philosophical answer. Why choose?
They're both great. Why choose? Why can't you have both?
You just gave a very American answer. You're obsessed with abundance without worrying about scarcity. This is why you own every stock in the stock market, right? Why choose? That's kind of.
But if I feel like having pancakes, I'm gonna have pancakes. If I feel like having a nice Belgian waffle, I'm gonna have a nice Belgian waffle.
Okay,
why
but
choose?
If you had to choose,
it depends. Do we have blueberries on waffles?
Sure, you can have the blueberries on the waffles.
I mean, sometimes I may want some blueberry waffles.
Steve, does your wife ever call you indecisive at all?
No.
Because I feel like you're a little indecisive sometimes. Like it's hard for you to.
No, you take me somewhere. I don't even need to look at a menu. I know what I'm ordering. I'm not one of those people that can't make a decision. I walk into Starbucks. It's a pike with half and half.
Okay. Well, let's talk about this. So, Elizabeth Warren was on CNBC today, and she had some thoughts about corporate greed and price controls. The debate ended up getting into this conversation about corporate profit margins. And the problem that I saw while I was watching this video was that Elizabeth Warren was blaming Kraft Heinz for having profits go up 500%, but not pay too much in taxes, without realizing the only reason they had a 5x increase in profits is because a year prior in the same quarter, they took a loss. So the EPS number, yes, it's up 500%, but that's just because it was comparable against an easy comp, not because of corporate greed. On top of that, you had the Harris administration endorse a 25% minimum wealth tax on people who have $100 million or more. So I guess the broad question, and then we'll take it where it goes. Do any of these policies at all, price gouges, wealth tax, seem productive, and can they resolve the fundamental problems within our economy?
That's a lot to unpack there.
Okay, so let's unpack it. Let's unpack this.
Monopolies are not good for the consumer. Competition in a free market society is the best thing for the consumer. So I am all for protecting the consumer and having a business environment where everybody can compete. So I think that there's no question that that is the best way for free market to operate. Let the free markets operate. And if it comes to a situation where there is a monopoly and it cannot operate anymore in a free market, you have antitrust rules. Now, I got to take this. It's one of our lawyers. Give me a sec.
Okay, I muted you. For anyone who saw this Elizabeth Warren stuff today, it was really hilarious. And I definitely recommend people watch it later today. It was a real debate with her and Joe Kernan, like an aggressive debate. The problem was I think he was trying to ask a question and she wouldn't really get to the heart of his question, which kind of messed up like the way he was framing the debate. But it is a very interesting view on how senators are thinking about price gouging and corporate profits and corporate greed versus just people with some level of basic understandings of economics. And I don't even think this is political, dude. There's a lot of Democrats that understand how market economies work, but I think Elizabeth Warren didn't really get the point at all about a lot of these arguments. So that was entertaining to see here today. Joe was pissed. Yeah, he was pissed. Well, the problem was he was trying to talk, and then she was like, "You're not letting me talk." And he was like, "Well, I didn't even say anything." So she kind of gaslit him into feeling like he was talking over her when he really wasn't. He was just trying to get a point across. And again, like if I'm a host in an interview, there's one thing about letting someone talk. There's another thing about stopping them so you can make a point because you only have a limited amount of time so you can get them to say something that really matters. Otherwise, if you just let them keep talking, then like then they should just make their own video, right? There's no point for them to be on your show. So I think that's kind of important to consider about that. It's on CNBC, the Elizabeth Warren debate. It was also on Twitter as well. Maybe we'll watch it as well and see what it is. Steve is the type of guy who can ask for a lighter from a president to light his cigarette. Steve is the type of guy who can ask for a lighter from a president to light. That's hilarious. All right. As we wait for Steve, let's see what you guys got going on in the comments, and then we'll keep getting into that. Let's just say Steve and I were on the phone, and he had some very aggressive thoughts about that whole interview. Justin says, Steve said, I refuse to live in your communist world where I must only choose one breakfast. That's hilarious, dude. Dude, really, they were some of the best waffles I've ever had. They were the best. All right, you're back.
Yeah, sometimes I have to take calls. So lots to unpack, but I want to share my screen real quick.
Okay.
So I just built something. Where is Excel? There we go. Can you see this?
Yes.
I'm not going to tell you what companies these are, but this is total revenue on an annual basis in millions and net income. So in the trailing 12 months, company A has generated $26.32 billion in total revenue and $1.92 billion in net income. Company B, $150.14 billion and $2.15 billion. Do these, I should write profit margin here, so we'll do that. Do these profit margins look like these are monopolies? Or do these profit margins look like these companies are price gouging?
No, because they're below 10%.
I mean, even at a 10% profit margin, I don't even think that that's considered, high pricing power. I mean, this is, take a guess what companies these are. These are in the industry that was discussed on CNBC.
So I think the first one is Kraft Heinz.
First one is Kraft Heinz.
Second one, they've done 150 million TTM revenue.
Billion.
And then 2.1 billion in net income. I don't know. 150 billion in TTM. Kellogg's?
Kroger, which
I swear on my life I was going to say Kroger, but then I thought about it and I was like, Kroger is not that big to do 150 billion.
So,
I guess
there's no Kroger's by me, so not everybody may not know what Kroger is. Kroger is one of the largest supermarkets in America.
Yeah,
so,
there's none near me either. Interesting.
So if Kroger has a low single-digit profit margin, and then Kraft Heinz jumps around, but the highest it's been the past 6 years is 11%. I mean, I don't see this as companies that are necessarily price gouging, especially when there's competition in the marketplace.
Right.
So I think there's better examples. I don't think this was necessarily the example to make for that argument. I think there were better examples to make.
So your argument is essentially complaining about price controls is irrelevant when these companies are just trying to squeeze out some profit at the end of the day.
Yeah, I mean, look, I listened to it on the way home, and obviously Kraft Heinz was discussed, and I don't know if Kroger or other companies such as Albertsons was insinuated, but the profit margin on the actual retail outlets is incredibly slim. So I don't know how you tell them what they can and they cannot charge, because their markup is next to nothing. And you can't look at gross profit because gross profit doesn't take in operating expenses.
Correct.
So these are low margin businesses. And when it comes to food, there's a lot of inputs that impact food, from natural gas to oil to electricity to transportation costs. There's a lot of things, farm equipment, there's a lot of things, water, fertilizer. So I think this was the wrong industry to use as an example for that argument that was trying to be made.
Okay, let me ask you another question. Why is it bad if someone is worth $100 million in the United States to pay their fair share with 25% of their unrealized capital gains?
I mean, look, everybody has an opinion on taxes. You and I have had this conversation about how I feel about taxes and what I would do if I was in charge. I would implement a flat tax across the board and with no deductions. But I could also be talked into getting rid of income taxes altogether and having a straight flat tax on everything you purchase, goods and services. I think you can make both of them work. I mean, I've crunched the numbers, as you've seen, based on IRS reports, and you can crunch the numbers to get to a net surplus with a more fair tax code, in my opinion. But when you talk about an unrealized capital gains tax, it gets to be a very sticky conversation.
Why?
Because there's no event that occurred. So, and we don't even know what the broad strokes are. Like, we would really need to see what they are. If it's on personal wealth, if it's on businesses, if real estate is included, there's so many avenues of it. But ultimately, I'm not in favor of it because taxes started at the very top end and eventually hit everybody. And an unrealized capital gains tax 20, 30, 40 years down the road could eventually hit everybody. And if it actually is implemented, people that have $100 million or more may not be liquid, and it may be tied up in stock and other assets. And if they have to sell stock and other assets to pay the tax bill, you're going to crash the market because that's liquidity that just leaves. That's not a market factor where one person is selling and person B is buying. This is just somebody selling, and the liquidity completely leaves the market.
So you think Bezos and Zucks would start selling immediately if this happened?
How else are they going to come up with the money? If you're worth $100 billion and it's mostly stock, I mean, Bezos, whatever he's worth, a lot of that's Amazon stock. Let's just say it's $100 billion just to make the numbers easy. I mean, that's a $25 billion bill. Does he have $25 billion in cash laying around? I don't know. How else are you going to get it?
Even if it's a $5 billion bill after all of his fancy deductions, you gotta get $5 billion in cash somehow.
So I think there's other ways to fix the tax system and make the tax system work for the country. I mean, look, the argument about taxes being out of control is not necessarily fair because the country is a much different country. You have way more services now that need to be paid. This is not the same country it was in 1850 or 1925 or even 1975. You have to have taxes, unfortunately. I think everybody would love not to pay taxes. That's not realistic. Right. But you need a tax system that, one, works for everybody, and two, that, in my opinion, you'll stifle innovation. And we are in one of the most important periods. And you don't want these companies being stifled and people not being incentivized to build great companies because you're going to let our adversaries run right over us over the next 10, 20 years.
So
that's a very important aspect.
Can we talk more about that? Why would the incentive decrease if you taxed $100 million worth of wealth?
What's the incentive to build a business? Make money.
Well, if I want to push back and play devil's advocate, if you have a big idea and you want to build it, you're going to build it no matter what. Right? Like if you're that ambitious, you're going to go after it.
If you have an idea, you're going to implement it no matter what. But scaling, a lot of people are motivated by money.
Yeah.
That's what a capitalist society is. So, I mean, I think the risk is too great with stifling innovation to go that route. I think there's better ways to do it. And look, I'm not advocating for making people that are worth 100 million or more pay their fair share. I'm not saying that they shouldn't. I think that the deductions are crazy. I think the IRS code should be changed. And look, really think about what a flat tax system with no deductions would mean. And the other thing, when you are allowed to borrow against your stock and that not trigger a tax consequence is crazy. There shouldn't be loopholes for people to get out of paying taxes. If you're pulling money out of the system and you're pledging your stock as collateral, that needs to be fixed. Because technically you can just keep doing that and kicking the can down the road and never have to pay taxes on stock that you've acquired from starting a business or working at a company. So there are loopholes that need to be fixed. There's no question about that. I just think there's a better way to go about it. That's all.
Why do you think they are proposing this? What do you think this tax is for? Is it for
Now,
paying?
have you seen the national debt?
Okay, so you think it's about paying off the debt. You think that's...
I don't know if it's about paying it off, but you need to balance the budget. If you're not going to cut expenses, you need to increase revenue. So there's only really one way to do that.
Okay, I've never asked you this question. I'm curious if you have any take on this at all. If you were president, what is the first area you think would be easiest to cut spending on? And I know that's hard to do. That's hard to think of. Whatever you say, people are going to pick apart. But is there anything you think we're spending too much money on?
I've never really thought about in that aspect. And I think there's so many things ingrained. I don't know if it's getting rid of anything. I think it's more overhauling how we go about paying for things and the process. I'd have to really look at it. I think it's more important to right size the tax code and start from where we are and how do we get there without hurting innovation and businesses and people, because there is a way to do that.
Yeah. Yeah. And I would imagine, I'm not a full expert on this, but I know like one of the bills we passed a couple years ago or something had like money for 80,000 new IRS agents. Like, do we really need 80,000 IRS agents? Like, I don't know. Can we give Palantir $200 million and have them run the tax system more efficiently than 80,000 agents? I think those are different ways I think we could figure out how to save in terms of costs. Okay, cool. So that's kind of your take on the broader policy proposals we saw this week. Going back to stocks, Palantir hit $33 this week. What do you think is going on with this one?
I mean, look, it could retrace. I love seeing it here. We'll see what happens. I think the future is bright for Palantir, and I think it's just, you got to be along for the ride for a couple of years. I think it's going to go up. It's going to go down. I think it'll trade sideways for a while, but you can't say that this is not a phenomenal company where the best days are behind it. The best days, in my opinion, are fully in front of Palantir.
Do you think it sees the 20s again this year, or do you think we're on the ride in the 30s?
We'll see.
I think 27 to 35 is going to become the new range.
That'd be nice. I mean, look, we'll see. Who knows?
Okay, SoFi, this bad boy's up 5%. You were kind of pissed off last week. I would imagine you're not as pissed off. Any updated thoughts on this one?
Yeah, let's go to the next topic.
Why do you hate SoFi so much, dude? You have a lot of SoFi.
I'm going to get on a very long rant about it. I don't want to.
Okay, so that's what we have on SoFi. Snowflake, let's talk about this one. Any thoughts on buying the dip here, down 15%?
No, it's the same thing. There's no more Slootman. There's no more Snowflake.
Okay. Have you, at all looked at Kava this year?
No, I don't even know what it is.
It's a restaurant stock, Mediterranean food. It's up 170%. It's outperformed NVIDIA.
Nice.
It's up 20% today. And I don't know. Maybe it's something to look into. Maybe I'm sure we both missed the run on this, but if it's the next Chipotle at a very early stage, then maybe there's something there. Okay, so thoughts here on good old Tesla and an argument around Tesla and Uber. So Uber partnered with Cruise yesterday, and the idea was to bring their autonomous cars from Cruise onto the Uber platform. Where do you fall on the Tesla versus Uber debate? Do you think if Tesla solves FSD, Uber's dead?
I think it depends on execution, and why can't Uber just buy a bunch of Teslas and deploy those instead of having drivers? I mean, it's too early to tell. We need to see how it unfolds.
But you are not a fan of FSD necessarily stopping Uber from winning. You think they can? There's a synergistic energy with those two.
I think they can both coexist, at least for a while. It's still, unless Tesla is going to operate, and keep in mind, nobody knows. I don't know. You don't know. Nobody knows. Elon does not know. at what point federal regulation will come, and then at what point state and local regulation will come for allowing FSD vehicles to drive on the roads. You need full regulation for these vehicles to operate. So whenever that comes is anybody's guess at this point. But let's just argue, for argument's sake, let's just say you're 5 years away from that becoming a reality, or 2030. 2030, you have FSD. Okay. Not every person who owns a Tesla is going to enroll the Tesla into the program to go drive people around when they're not using the vehicle.
Yeah.
No matter what car I own, I am not letting it go drive people around. That's plain and simple. Not happening. Now, Tesla may build its own Uber with its own software, run its own company, and compete with Uber. Maybe. Uber can buy a bunch of taxis, buy a bunch of Teslas using those taxis, and take the same model. They already have the infrastructure built. So can they coexist? Yes. Can Tesla beat them? Yes. I think it's a lot of time for that to unfold. And it's not something that I'm interested in because I could care less about FSD. If the bot thing doesn't play out the way I think, I'm selling Tesla.
What is your timeline on that? Like, do you need to see progress in 2025, 2026 on selling?
I need to see the idea develop, and I think, look, I don't have to sell.
No.
I would consider it, I guess, at the end of next year, if it doesn't look like you're going to have Optimus for sale on at least a business level in 2026 or 2027. But it seems like from what he said that they think that they're going to really be able to start using it internally and selling it by the end of next year. So, we need to see. But I think that that's the future. And I think that Tesla has the best chance at scaling on a mass adoption level better than any other company because they've already proven what they can do in the automobile industry. And I don't think that these other companies can hold a candle to their engineering process.
So speaking of those other companies, I think let's watch a quick little video. I was going to show this before, but you're here with me now. Figure, the startup that I'm invested in, just put out a new video interview. It's 3 minutes showing off the factory and the latest robot. And I think this is just bullish for Tesla because it shows the scale at which humanoid robots are being developed is massive. So here is an update on Figure and their humanoid robotics, and then we'll talk more about the robots themselves.
I think everybody really, listen, you're amazing, but the star of the show here is Figure 2. So do you mind if maybe we open up this podcast with a quick look at Figure 2, if you don't mind? Can we go take a quick sneak peek on the shop floor?
Yeah, sure. Let's make sure it's not being used, but let's, I can give you guys a quick, tour of the office. So I guess welcome to Figure.
Thank you.
So we're well over 100 engineers now. We're based here in Northern California in the San Francisco Bay Area. We just unveiled last week Figure 2, which is our second generation humanoid robot. And we have, right now we're manufacturing about one a week in our facility here in California. And we have, several of them here now.
So they're making one a week. I would imagine Tesla's making at least one a week, if not more, if they're going to roll them out by 2025.
On the floor. So here's, a quick look at Figure 2 robot that we're about already started doing some tests on right now.
Amazing. I know your team is about to activate it. If you're going to say that the principal differences between Figure 1 and Figure 2, just for folks, the company's like 2 years old or less, right? You've gone from like 0 to infinity super fast.
Yeah.
What's the difference between what upgrades did you make in Figure 2 here?
Yeah, there's several. So
your top 5.
Yeah, so I think first is we tripled the amount of CPU and GPU on board just for more overall compute and inference. The second is we almost doubled the battery to about 2.3 kilowatt hours. It's all on board the system in the middle of the torso here next to basically the compute and GPU. We had all the wires all internal. So there's no external wires, cabling, electronics. That's really for reliability and for overall packaging. We also have an exoskeleton structure. So all the outer shells of the robot actually take loads, which is opposed to kind of how we did the first generation robots. This would be like more akin to how you do it, like say aviation. My last company, Archer, we the skins on the aircraft take the loads of the vehicle. So I think it's pretty unique here for a system like this. We also have 6 onboard cameras, so we have more perception, more ability to see our surroundings.
Where are the cameras on the robot here?
We have them in the head, in the back, and in the lower torso.
That's good. And I assume that the exoskeleton helps you reduce overall weight of the robot.
Yeah, it's basically like overall, the parts will get a little bit stiffer as they get a little bit wider. We found that having one structure for both crash loads and stiffness is the right ideal mass trade. And so figure 1 had kind of like both structure and outer shell for loads. And that's just really not ideal where you, like the structure is really sized by crash loads. So then you end up having basically double mass in a lot of ways. Yeah.
And the hands, have you made improvements on the hands on the?
Yeah. So these
robot?
hands
Show us. Hold his hand and show us what it looks like to do it.
These are our 4th generation hands now. And we made like quite a lot of improvements over the previous generations. Better sensors, better packaging, better for mass, better strength, better speeds of the fingers. Overall, just better dexterity and control of like fine grain manipulation that we're doing on board the robot. We need to do like human-like applications. So the more here that we can do human-like tasks and grab human-like objects, the better for generalization of a robot.
So, Steve, that's the inside of a humanoid robotics company. Any thoughts after seeing that on how fast this is moving?
Yeah, I think this is the future. I think that this has been the future. I think this is where a lot of things are going. And there's going to be several companies in it. I think Tesla is going to be a winner take most, not a winner take all. And I think that you'll have companies like Figure 8, Boston Dynamics, and some other ones for other applications. But this is going to be a huge industry. And if you caught what he said about GPUs, when they scale this, and that's what I am really waiting for with the NVIDIA play also, because it may run past data centers in AI, you may have tremendous GPU capacity needed for robotics and even onboard GPUs into robotics too at some point. So I don't know.
There is no way NVIDIA, if Figure or Optimus wins, NVIDIA is going to win with it. There's just no way.
I agree.
Let me ask you this question. If you were Elon, would you sell Optimus robots to the military? If the military said, hey, we got $1 billion, can you give us 100,000 robots? Would you sell it? Because the CEO, Brett, of that Figure, he has an answer to this, and he has a definitive answer on this question. So I'm curious what your answer would be.
If his definitive answer is no, then he should leave the country.
His definitive answer is no.
He should leave the country.
I disagree with you here. I disagree with you. The only reason I disagree with you, I get you're probably coming at from a patriotic perspective. We don't know how these robots can be manipulated by the state to inflict harm, bodily harm. And so if the police, let me finish. If the New York police say, hey, Amit, we want to buy 100,000 robots from your robot company, I don't want robots running around chasing humans, dude. That's a little too intense for me.
Okay, here's the problem. Our adversaries will be utilizing robotics in warfare. We need to be at the forefront of that. So these companies should be open to working with the military, the same way Palantir is open to working with the military. Because we do not want to fall behind anybody else. So to take that stance is crazy.
I don't know if it's crazy, dude. I mean, I get what you're saying, but at some level,
I hate war. Okay, I hate war. I've had several very close friends serve. I've seen firsthand what PTSD does. My old roommate was, I'm not going to say what branch he was in, serious PTSD. Okay, a couple of my friends have had some really rough times with that stuff. But what I will tell you is if you are a company in this country, you should want our military and our government and the economy of this country to be the best it possibly can be. And to not want to work with the military to advance its capabilities doesn't do anything for our national security. So if I was in that position, my answer would be absolutely yes. And not just sell, but develop with the military, because you don't want them falling behind any other country.
Yeah, I agree. I think the defensive turn argument is fair. I just think if you deploy them into the military and you have robots, and really it's less about the military for me, it's more about the police force. I don't know if we want police robots with
That's not what
automatic
you said.
guns.
You said military, not
Well,
police.
it's kind of both. I mean, do you want police?
Not kind of both. They're two separate things.
Okay, so answer the police
police
question.
force is domestic internal.
Would you want domestic internal robots governing us as police?
Probably not.
Okay, so you're against the police part, but you're for the battlefield part, essentially, which I think is fair. I think that's fair.
Because think about it. What another country does domestically doesn't impact us necessarily when it comes to police. Because their police aren't fighting against our military if we go to war or if one of our allies gets into a war.
Right.
The same way, if we do that here, it's not going to impact another country. But with the military, I don't want our soldiers going up against Terminators where we get slaughtered.
No, I agree. 100%.
So,
like that is a fair pushback. That's a lot of.
So I would be 100% for military. I don't think I would necessarily want it domestically as police force replacing humans. I think it is important to have that human-to-human interaction, but I'd have to really think about it more. But from the military aspect, which was the original question, 100% yes.
Let's see what he had to say about that. I think it's like a minute. Let's get that part.
Is the Defense Department and the government a client or near client? How do you feel about plugging into that world?
Yeah, we won't do anything defense related at all. It's like in our manifesto online, we think the civilian market is just orders of magnitude bigger than defense, and it's not in our interest to build a war machine of any kind, either non-kinetic war machine. So we won't even have conversations. We won't take phone calls with anybody in this area.
Fascinating. How do you feel about civil police and security?
Right.
Let him just finish this last part.
Right now, no. We're not touching any of that stuff. We don't want to give any. We don't want to give any requirements that are needed to have the robot produce harm.
I respect that.
To any humans. Our goal is to do work. We want to do work. We think that frees. We think it significantly helps the economy, helps lower goods and service prices, and do good work for the world. And I think it's much needed. I think we're putting all our eggs in that basket right now.
What industry?
So I wish he would have just said, we think that the market for commercial is much bigger than the defense, and that's what we're focusing on, and just leave it at that. That would have been a perfect.
Wait, hold on, Steve. To be fair, that is exactly what he said. Now he added. What he said. What did he say?
He said they won't even take phone calls from the Department of Defense.
Yeah, so you wanted him
he should have just, in my opinion, he should have just kept it as, we think commercialization is a bigger market, and that's what we're focused on.
That's fair, but then you have to ask why, and I think the why comes down to
his answer addresses the why. It's a one-sentence answer that addresses everything. But to take that stance about the military, once again, I am pro-soldiers. I am pro-veterans, and I want our soldiers and veterans to be taken care of, and I want them to have the best technology and the best equipment they could possibly have, and I want them having the upper hand, God forbid they're ever on the battlefield against an adversary. So from that aspect, I am very, I want these companies working with the military, because our adversaries will be doing everything they can to gain the upper hand.
Would it be bad to you if Elon rejects the government's bid for Optimus?
I'd be surprised, considering he works with the government with SpaceX. I'd be surprised.
I also think it's a little bit more of a branding thing. Do you want to be branded as the company selling robots to the military industrial complex? That part, I think, from an investor standpoint, is a little tough for them as a startup to deal with, much less for Tesla to deal with. I agree with you, though. You're making a very fair argument that if you could protect soldiers, and if China's going to use robots, then of course we got to have robots, 100%. But I wonder if Elon would, because if this guy's going to give up that market opportunity, if he's not lying about what he just said, that's Elon's market then, right?
Look, it's just one of those things where I want, if if we didn't have to worry about war, that would be the best case scenario. If we never went to war again and other countries never went to war again, that is obviously the best scenario. The loss of human life is tragic, absolutely tragic. Never want to see that. But the reality is that's not the world we live in. So I would like America to have the best advantages possible. And to do that, we need the best companies possible working with military.
Right.
We just don't live in a world where that is not the scenario.
Right. Do you still own Fortinet or is it gone?
Got called away.
And are you upset about that?
No.
So you don't have any more cybersecurity exposure, or not as much as before?
I mean, if you consider Palantir cybersecurity like some do, yes. But no, Fortinet got called away. I didn't want to roll them. I figured I would use that money this week. I ended up not using that money, and I'm still sitting on it. So,
okay, your boy Tim Cook is unveiling this iPhone September 20th. Are you excited about the upgrade cycle? Do you have any concerns about it? And what are your updated thoughts on Apple?
yeah, it's going to be the biggest upgrade cycle we've seen. It's going to be great.
You really believe that?
Yeah, I do. And it's going to open up levels to services. So I'm very bullish on it. Hey, why don't we talk about Altria Group for a moment?
Let's talk about Altria Group. Let's talk about it. Where
So,
wow,
look at
it's
the
up.
price. Look at the price.
It's wow, it's had a hell of a month. Not bad, 52.44. Okay.
And they raised the dividend
again.
And they raised the dividend by 4.1% the other day.
This is one of your favorite stocks. You just love this stock so much.
It's now one of my favorite stocks. I've been saying that this is undervalued for how long?
It's almost like a year, yeah. Well, let me ask you about this because we were talking about this before you joined. It goes into the discussion of ethics here. Do you feel any ethical issue with owning Altria Group at all?
Last time I checked, Altria Group sells products that are illegal in this country.
Yeah, but they kill people, like with cigarettes.
The last time I checked, this is a publicly traded company.
Yeah, but do you ever wake up at night and think, man, I own a stock that kills people?
No. It's a publicly traded company. It had a PE of 8 when I invested. It had a 9.5% dividend, and the numbers looked very good. So, look, it's
The reason it was brought up is
people can do what they want. Who am I to tell somebody what they can and they can't do?
Yeah, someone asked me in the chat, admit, do you feel unethical owning Robinhood? And I was like, no, like I don't care. So like, there's everyone has their own different ethical, persuasions around stocks. But if people want to buy cigarettes and I'm investing in a company that sells them cigarettes, like I talked about this before, my dad owned a liquor store growing up. The amount of people I saw that bought cigarettes from my dad, is my dad a murderer for selling people cigarettes? No, obviously, right? That chain of logic.
Last time I checked, Budweiser, Constellation Brands, they're all publicly traded companies. Diageo.
Yeah. So at the end of the day,
that's like saying why should you invest in Meta? Social media is horrible for the
what is your response to that argument as a shareholder? Because I'm sure some people in the chat think Meta is the worst company on the planet. What do you say to social media?
Look, I would say think about what it's done to magnify businesses and help businesses scale. I mean, it has done a lot of good. For everything that's bad with it, it's done a lot of good.
Yeah, I think the small businesses alone getting the ability to get their message out there and advertise, that's a big deal, dude.
I mean, look, you can make an argument about everything. You can make an argument about being invested in Coca-Cola because the Coca-Cola has a high sugar content and sugar can potentially lead to diabetes. So you can make an argument about investing in anything when it comes down to it. And look, my biggest thing is nobody's forcing anybody else to invest.
That's America. That's the beauty of having a choice, right? Let me show you this chart, Steve. That's a little freaky of a chart, but I wonder your perspective on it. So the red is when we've done a rate cut. The gray is a recession. The blue is the unemployment rate. As you can see, every time we do a cut, unemployment goes up and we have a recession. Do you think Jay Powell nails the soft landing, or do you think when he cuts in September, we get unemployment that goes up and then we have a recession?
So I've never looked at this unemployment chart with looking at where the rate cut is. And normally rate cuts occur because unemployment has been skyrocketing.
Correct.
And look, I don't know if I think we are going to hit a soft landing. I think they're late to the party with the rate cut. And unemployment's gone from, 3.5 to 4.3% since last June or last July. So,
yes.
You know,
which was needed to get inflation down.
Depends what type of economic theory.
I know you don't love that argument, but like you technically you needed it.
It depends what type of economic theory you subscribe to.
I think because of all the money we printed and how fast we raised rates and the fact that
hold on a minute. Think about what you just said.
What?
All the money we printed.
Yeah.
Okay.
Well, no, but that's my point. Yeah. Like we printed so much money and we raised rates so quick that I think there is a bit of a unique scenario we're in where even though unemployment is going up, we can cut rates and stop that rate of unemployment going up so much and quell inflation, which is the soft landing, which would help.
The biggest problem is you have so many people, and I'm not saying this is a bad thing or a good thing. I'm just saying the facts are it's not just one little committee. Okay? You have a lot of people that are part of the decision-making process, which makes the wheels turn slowly. Sometimes you need to act quickly. And when you can't act quickly, things can get out of control. And unfortunately, we got a super cycle of a perfect storm with supply chain issues, pent-up demand coming out of COVID that just all intersected at the same time. And there's a lot of reasons for it, but I'm glad that they're finally going to cut. I think it's going to be okay. I don't think that we're going to necessarily go into a recession over the next 6 months. A recession is obviously inevitable in the future. When that occurs, who knows?
So, Marjorie, how do you say her name? Marjorie Taylor Greene. I think that's how you say her name. She bought some stocks. She bought, we got this today, Amazon, FedEx, Google, Intel, Kinder Morgan, and Nvidia.
Oh, look at that. Kinder Morgan.
That's another one. It's another Steve one. And I only know Kinder Morgan because of Palantir and you, to be honest. That's the only reason. What do you think of these picks? You think these are good 6 picks? Would you copy this?
No, I had an article about Kinder Morgan come out this morning.
Oh, well, we should plug that then. I did not even know that. So I'll put that in the chat.
I've been preaching Kinder Morgan for a while now.
Okay, why? Give me the bull case on Kinder Morgan.
66,000 miles of natural gas pipeline. They transport 40% of the natural gas in this country. They have, I think, 65 or 66% of their contracts on take or pay, 32% or something like that on fee base, and only 5% at commodity risk. And when you look at what Southern Company said on their conference call, and you look at what the demand of energy is projected to be over the next 10, 20, 30 years, and how you fill that void, Kinder Morgan, it makes all the sense in the world to me. And there is a very important aspect that other people are not looking at. They have about $6 billion in floating rate debt. And when the Fed starts cutting rates, all their savings will be accredited to the bottom line.
Well, what does that mean? Hold on. What does that mean? What do you mean savings will be credited to the bottom line? Can you explain that?
Floating rate debt, I don't know what the percentage is, but it's probably prime plus 1%, prime plus 2%, whatever it is. So it moves in tandem with the Fed funds rate. So as Fed funds rate goes up, if it's at 3% plus 1, they're paying 4%. If it's at 5% plus 1, they're paying 6%. But as it comes down, so does the floating rate debt. And,
right.
It's going to be good for earnings. They also operate a company where you cannot replace their infrastructure. I know I have the infrastructure map in there somewhere, if you go to that slide, you're not ripping and replacing that infrastructure. There's no new competitor. You and I could go raise $5 billion, and we're not going to be able to compete and build an infrastructure like this. There's a reason Warren Buffett purchased 7,700 miles of pipeline from Dominion in 2020. He has all the money and all the political connections in the world, and it was not advantageous for him to build pipeline. Go through the permitting process, connectivity, hooking up to the major basins, dealing with upstream, dealing with zoning, dealing with environmental, the amount of red tape. You're not replacing this. And look, I would love for there to be more renewable energy. I'm pro-renewable. I have investments in renewable energy. But the reality is that traditional energy sources are going to be here for the next couple of decades.
You know, ironically, Palantir just put out a 50-minute video talking about their software in Kinder Morgan's.
I'm going to watch that because Kinder Morgan's been a long-term Palantir customer.
Yeah, long time. It's been like 4 or 5 years now. Yeah. Okay, so and they have a divvy of 6% or 5.5%.
Yeah, and you look at their financials. This isn't the Kinder Morgan that people got burnt on. The bottom line is that they've erased $11 billion of long-term debt over since the end of 2015. They've dropped their net debt to EBITDA ratio from 6.22x to 4.94x, and they have done this during an inflationary environment. They put the company in a position where they can succeed. They're growing the dividend again. People got bent out of shape because the dividend got reduced. Well, it was either that or drastically hurt the company even more. Management proved that they can make tough decisions in tough environments. And I think that you're going to see more activity through their system, and it's going to be good for the company and the shareholders.
Oil prices affect their stock, right?
Not really.
Why?
Natural gas is in the gutter on prices, yet Kinder Morgan's up. It's because of their contract. So take or pay, and I have it in there. There was a slide in their presentation, but I don't think I put it in the article. So basically, real quick, take or pay contracts, which I believe they have like 65% or 63% of their contracted volumes at. If you go to nat gas and look at a 5-year chart, you'll see it's sold off. When the Ukraine war was just starting, I think natural gas was over $4. Now it's around $2. But if I contract with Kinder Morgan under take or pay, I'm paying no matter how much volume I use. So if I contract for 100 BCF per day and I only utilize 50% on transport, I have to pay full freight for my contracted volume because I'm buying the contracted volume on their pipelines no matter how much product I push through it. So I can utilize 1%, 50%, or 100%. I'm paying for the contracted volume. The other big thing is fee-based. So they also have 30-something% of their contracts on fee-based, which is basically I'm paying you $5 per BCF on transport. And that doesn't change no matter what commodity pricing does. So whatever I move through, this is the set fee. Only 5% is a commodity pricing where their cash that they generate is impacted by natural gas moving up or down or refined products moving up or down. So you don't have commodity-based risk with their cash flow. It's all on utilization rates. And based on us needing more energy, their utilization rates are going up, not down.
While you're saying this, guys, Bitcoin is at 64,000, just cracked above 64. Interesting. So this is, and this stock you've owned for a couple of years now, right?
Yeah,
It's been a
I
while.
own a lot of them. I mean, look, Enbridge is the triple threat. I think Enbridge is amazing. They are the largest utility company now in North America after purchasing those 3 utility plants. I mean, they're the triple threat. They have an $8 or $9 billion renewable portfolio, one of the largest pipeline systems, one of the largest exporters, solid company. And I think like 31 or 32 years of dividend growth.
So these utilities and energy providers, along with the AI theme, you think they're going to also catch a bid over the next 5 years as well because of that?
Yeah, I mean, you always hear Dan Ives talk about second and third derivative plays of AI. These are definitely a derivative play on AI because AI is one of the big factors of the increased demand in energy.
Right.
And in order for AI and the future of computing to work, you need more energy. Energy comes in the forms of traditional fuel sources and electricity. Around 35 to 40% of the country's electricity is through natural gas fired utility plants. So you're going to see a lot of money flow to utilities and to pipeline companies. And also, don't forget, when the Fed starts cutting, people are going to be looking for yield, not just yield, but yield with growth. And instead of investing in bonds or keeping cash in CDs or in money markets, I think they're going to be looking at companies like Enbridge that has raised the dividend for 3 decades and has a good CAGR on the dividend, or companies like Energy Transfer and Energy Products Partners, because it's stable cash flow, it's a growing dividend, mid to high single-digit yields in an environment where the risk-free rate of return is declining. So they're going to look very enticing to people.
Right. So your play for rate cuts is not small caps, it's energy and banks, right? You think those are going to get the best benefit?
No. I mean, I've never been a small cap person necessarily. Now I'm invested in small caps. Don't get me wrong, but it's not something I follow. But there's certain companies that are considered small caps that I think are going to be very big companies. So that's why I'm investing. Like SoFi is considered a small cap, is it not?
Yeah, pretty much.
But I don't like actively follow the small cap index or anything.
Yeah, guys, Bitcoin is definitely mooning right now. It is showing some momentum. I don't know why. I think it's this whole rate cut stuff, but 64 up 6% is huge, man. We haven't seen 64 in since August, since July 30th, around about that time. So it's been about a month. Okay, interesting. So overall, you feel Fed's on the right path now. Rate cuts are coming in September.
Mm-hmm.
NVIDIA earnings will crush, and broader economy should be okay.
Yeah, we'll see. I mean, look, something could go very wrong.
Yes.
I think some people need to realize that something can always go wrong. Just because everything looks like it's going good doesn't mean that you can't hit a speed bump or pothole in the road. That's investing. But I think we're on a good track forward. And I think you're going to see corporate earnings continue to do well.
Okay, now give me some alternative investments to round this up. What else are you investing in besides the stock market?
It's in the other room where I just bought. I don't want to get up.
Okay, so tell me, what did you buy?
I've been buying Juan Soto and Aaron Judge cards at the moment.
Who's Aaron Judge?
You did not just say that. You did not just say that.
I've heard the name before, but I don't actually know who the dude is. Like, I don't know.
I don't care if you don't follow baseball or not. You live in Jersey. You live right there.
Well, he played on the Yankees or something?
He's got 48 home runs already this season. He may break his own home run record.
He's still alive, Aaron Judge? What? Dude, it sounded like a name from like 1947. Aaron Judge? I got it right. He was on the Yankees. I got it right. He was on the Yankees.
All right. So I was buying 2017 Bowman Chrome PSA 10 Judge rookies at, I want to say I'd have to look at my eBay purchase history for like 110 to 130 a pop. And if you go to sportcardinvestor.com, we can look at the price. I think they're going, last sales are like 220 or so, that area.
This is a real website, Sport Card Investor.
So in the price guide thing, type in Aaron Judge 2017. Scroll down a little bit. That one right there stops. Go up a little, up a little. That one right there, Chrome base. 2017 Bowman Chrome base. Click on that. So last sale is
Whoa,
two.
there's a whole chart on this, bro. Holy crap.
Oh, the alternative asset base is real. Okay. Like this
Dude,
is the
there's
free
a
version.
card for a card? Huh.
Can I blow your mind? Will you allow me to blow your mind?
You can blow anything you want.
I'm gonna blow your mind. Give me a
I'm
moment.
just kidding. I'm kidding. Go ahead.
Give me a moment. I gotta find the spreadsheet I put together.
Dude, what? There's a
this
fucking. This is
You're gonna
ridiculous.
think I'm more crazy than you already think. So give me a moment. I gotta figure out where I saved this. I put this together the other night.
But there's a ticker for a fucking card. There's a chart.
You're
Like,
not ready for what I'm about to drop on you. Hold on.
dude, a stock chart for a baseball card is like ridiculous. But like, I get it.
It's not ridiculous.
I still think our idea of making finance influencer trading cards, like a Kathy Wood rookie. Come on, bro. Dan Iles rookie.
Why are you talking about Zoom?
Oh man, we haven't talked about Zoom. That's a good one. We should talk about it.
Why are you talking about Zoom, buddy?
Roku got upgraded, by the way, today. Guggenheim put out a note on them, but Roku has been in a tough situation. Yeah, they're up 12% today. Bitcoin is on the move, guys. Yeah, go ahead.
Man, this is gonna you're gonna think I'm nuts.
Can you zoom in? Wow.
So these are some of the things I'm looking at, some of the things I'm investing in. But like PSA is the #1 grading company. And I went on the population report to see how many PSAs have been graded. So what made me choose the Bowman Chrome over the Topps Chrome is, just give me one sec. I do have another tab, which is even crazier. So there's been 9,920 Topps Chrome cards graded versus Bowman Chrome of 3,133. I'm sorry, that's a wrong one. Place that with that. There's way more Topps Chrome. Topps Chrome is 8,260. So I have been looking at it of how many are each. You got about an 80% rate of getting a PSA 10 when you send these out to get graded. So I'm looking at it as the Bowman Chromes are more scarce. So I was buying Bowman Chromes back when they were 110, 120 a piece. Obviously, I've done pretty well on those. And then I looked at the total existence from the big three companies, which are PSA, BGS, and SGC. And I've been looking at what percentage of the population is each. I mean, I'm getting down on this. So in Bowman Chrome, 67% of the market is PSA 10s out of the big three. But yeah, there's population reports, there's statistics I run, models I run on this. It's one of my buddies just got a BGS 10 black label. There's only 15 of them in existence for the Topps Chrome. I'm not going to say how much he paid, but yeah.
So I have a question, dude. What if I never wanted to own this physical card, but I wanted to trade the Aaron Judge 2017 Bowman Chrome on an online website? Isn't that exactly
so you could buy the physical card and have it sent to the PSA vault so you don't have to hold on to it. And then you could send it from the PSA vault right to eBay, put it on, and then after it sells, they'll send it out and transfer ownership to somebody else. So you never have to physically take possession.
But wouldn't it be easier if we actually could digitally trade the concepts of these cards, which is an NFT?
You can digitally trade it through eBay Vault or PSA Vault.
No, but like I'm starting to like think of this as NFTs. I know NFTs like they never took off, but like if I could trade the idea of an Aaron Judge rookie, just like I trade the idea of a share of pounds here, right?
No, digital cards are no. Have you? Just do me a favor.
Is there really a difference?
Go to Google. Huge difference. Go to Google. Type in the National Card Show and just go to images. Look at how big this is. The sports card market is crazy.
Yeah, but Steve, I get you there. My point, yeah, it's big, and there's a lot of people trading physical cards. But my point is, you and me are not physically trading shares of Tesla and Palantir. We are trading digital representations of those shares.
But our shares are backed by the physical shares. What you're talking about, they already have. So you can have these cards, like you could go buy cards on eBay that are physical cards that are in the eBay vault or the PSA vault and leave them there and never take possession. You can still sell them on eBay.
Yeah, but why isn't there like a Robinhood for trading alternatives where you can just
I mean, I wanted to build it, but I don't think, like, I wrote a 25-page business plan. Like, I did a lot of stuff.
No, but I don't think it's just you. I think they built it. It's called OpenSea. They built it. It's just never took off.
No, that's bullshit. Forget it.
OpenSea is basically a Robinhood for digital assets, I would imagine.
Anyway,
I mean, it's NFTs. NFTs.
Can we run 2 minutes of a video or not?
2 minutes of a video? Yeah, sure.
So, this will fucking get you crazy. I'm gonna
what's the
link it.
video?
Let me find it. It's Jeff Wilson on YouTube, and I'm not going to spoil it. You're going to think this is nuts. Give me 1 sec. It's on Sport Card Investor's site. Give me a sec.
Wait, this is a sports video?
Yeah.
Yeah, send me the link. Let me see if the channel is good, or else they're going to copyright the stream. Because
yeah, I'm giving you the link right now. It's in private.
Yeah, Steve, they're definitely gonna fuck over the stream.
Oh, you can't. If you can't do it, you can't do it.
Yeah, we can't do it. No, this is a legit channel. They would absolutely copyright the stream. You know.
Oh, of course, it's a legit channel. You were just playing stuff from CNBC. CNBC is not a legit channel.
No, CNBC doesn't care. CNBC is too big to care about YouTube, like in terms of copyright strikes. But these guys, they definitely will care. Also, CNBC likes it when you play their videos because it's just free marketing for them. But so this guy, what is the point of this guy's channel?
I would think Jeff Wilson would love if you played the video.
I would think so too.
So there's a video on here where Jeff Wilson tried doing a deal for, it's that one right there, the $2 million offer.
Okay.
That I have the red bar on. So basically, that guy on the left purchased those two 1985 Star Jordans because that's his true rookie card. It's actually at the 27-minute mark. And he paid a couple $100,000 for the two of them, I believe. And at the beginning of the National Card Show, which was a couple of weeks ago, somebody made him a $2 million offer for the two cards, and he turned it down.
Wow.
Because there's only 3 of them in existence. And he has 2 of them. And because of the way that the Star 1985 cards were printed, there's no PSA 10s in existence. There's 3 PSA 9s. And you can look at the set registry, there's no 10s because PSA has a pop report. Somebody offered him $2 million in cold hard cash, turned it down, and after the national convention was over, multiple people that are considered authorities in the industry said this was the best financial decision he did because those cards are probably now worth $3 or $3.5 million.
How much did he pay for them
as a pair? I think he paid $100,000 each or something like that. He says in the video, it was a couple $100,000 for both of them. He paid.
I mean, Michael Jordan will probably be in the next.
Be very careful with what you say.
No. I'm going to say what you want me to say. He's going to be the greatest NBA player of all time.
Yes.
LeBron's not taking the legacy. Steph Curry's not. So in the next 50 years, it's still going to be Jordan, which means that thing is probably going to be worth $5 to $6 million at minimum, I would say. His brand is bigger than everything.
Does Graham Stephan care if you copyright his stuff?
Yes. Oh, that motherfucker's greedy.
So Patrick Bet-David went on his thing, and they were talking about the Wayne Gretzky cards. So Patrick Bet-David had purchased Wayne Gretzky OPC PSA 10 rookie cards. I forget how much, but he sold them. And then 2 years later, they end up being worth like $1 million more than what he sold them for.
Yeah. So, okay, to give some value to people who are in the chat and are like listening to how this plays out, your argument is people should think of alternative assets in
Oh,
addition
I'm not
to their.
saying that people should buy these or not buy them.
I know, but
right?
you're saying it's something to look at just like as a diversified portfolio is your point.
I mean, I don't even know if I'd go that far. I'm just saying that there's money to be made in it if you know what you're doing, and it's not easy to make money. But this is a real market that is getting bigger because Michael Rubin is putting a tremendous amount of money behind this since he bought Tops, and his goal is to 10x the hobby, and there's money to be made. Whether this is an investment or not, you can consider it, but the collectible market is only getting bigger, in my opinion, because my theory is my generation, your generation care less about fine art, and this is going to replace fine art. And that's a hot take.
And he's with all the superstars, Tom Brady.
They were
these
all at
guys.
Fanatics Fest last weekend. Fanatics was crazy.
Was it New York or New Jersey?
It was at the Javits Center. He rented out the entire Javits Center for 4 days.
That's in Philly, right? Javits Center? What, dude? I don't know where that place is. Where is it? Where's the Javits? I don't even know how to spell
on
it.
the west side of the city. I'm doing this because you're right there. You know what the Javits Center is.
No, I've never heard of the Javits Center. What the
The
fuck?
Javits Convention Center. You really don't know what that is?
No, how do you spell Javis? What are you saying?
I don't know. Javitts, something like that.
Javis Center.
Come anywhere close is going to bring it right up. It's one of the largest convention centers in the country.
Oh, it's in New York. It's in New York.
Yeah, it's in the city.
Oh, no, I've never heard of this. Did anyone know this in the chat? I didn't know this was there.
Type in Fanatics Fest. Type in Fanatics Fest and look at images from it. This is where they have the annual auto show. You really never heard of this place?
No, dude, I never heard of it.
Fanatics Fest 2024. I mean, this was wild what they had there. WWE had everything for the walkouts. UFC had a ring there. They were doing 40-yard dashes. Fantastic Fest? What do you seriously?
Sorry. I got it. I know it. It was August 16th. August. Oh, so it already happened. Yeah, it happened.
Yeah, and the videos on YouTube are wild from it. Tom Brady was on the floor buying cards. It was pretty crazy.
Yeah, there it is. All right.
He's going to do 2 a year or maybe 3 a year. The next one's in Orlando. Then they're going to do a spring one in LA. I think that the card market's going to get bigger, and there's some interesting plays out there. I mean, we'll see.
All right. Not bad. Exciting stuff. Yeah, I guess now NVIDIA's next. So next Friday when we talk on Wednesday, we've got NVIDIA. And if they do well, we'll see what happens on Friday. Oh, guys, we already know his opinion. Rocket Lab's up a lot. Do you care about them yet or no?
What is RKLB?
Rocket Lab.
What is that?
It's a company, Steve.
I know. Whatever.
It's up a lot.
I don't see the use case.
For a rocket? How do you not see the use case for a rocket?
For Rocket Lab, like, how are they going to make money? I looked at their financials. Doesn't impress me. You have huge competition from SpaceX. I don't know.
Okay.
Like, how much are we, except for putting satellites in orbit, what are we really doing in space?
I think space is going to be an entire commercial industry, bro. Like,
could be. I could miss it, but you know, there's too many other things I want to invest in the Rocket Lab.
Do you invest in insurance companies?
No.
Wait, you don't? You don't invest in like Geico and Chubbs and all that stuff?
Well, you can't invest in Geico.
I mean, yeah.
You can invest in Berkshire Hathaway, which owns Geico.
I thought you were a big insurance guy. I didn't know you weren't a big insurance guy.
Just because I'm an insurance guy doesn't mean I have to invest in insurance companies.
Yeah, but Steve, you're the typical dude. If someone looked at you like this guy buys insurance stocks. What
are you talking about?
Dude, there's no way you're walking on the street and someone's like, that guy buys insurance stock. Like you fit the, like, I would not think you own Palantir, bro. Like, you look like an insurance guy.
I'm an original Palantir person.
I know. You also you have your physical share. It came in now. So Steve just.
Like, I was writing articles about Palantir the day they came out.
I know you've been here since the beginning. I'm just saying you look like an insurance dude.
Look like I only invest in insurance stocks. Okay.
Not only, but you definitely look like you have insurance part of your portfolio. 100%.
Okay.
Here's a question for you. I asked everyone on YouTube, and I made a poll about it. Which one 10x is first? SoFi, Rocket Lab, Rivian.
SoFi.
Why?
Rivian, I don't think is going to scale. Rocket Lab, I don't really see the use case to 10x. And SoFi, I think there's a case to 10x. It's pretty simple. And I could be wrong, but you give me those three options, I think SoFi is a clear winner in that group.
Okay, at 4,500 votes, 50% of people said SoFi. They agreed. SoFi to 70 billion. That would be the market cap if SoFi ends up 10xing. Any quick updated thoughts on Starbucks at all? They kept their 20% gain. And they're doing
okay. I mean, I think their CEO should just listen to what I said on last week and he'll be a champion.
Dude, they paid him 100 million and they got back 20 billion in market cap.
And one of them is not my idea. The whole subscription thing, I stole that from Calacanis because he said that in a tweet. And I agree with him.
They already have a subscription though. They already have
no. $20 a month to cut the line.
Oh, to cut the line. Interesting. Okay.
Because they have the mobile app, put a tier in there. So for $20, your order is now priority. So if you place an order and there's 10 orders in front of you, it automatically goes to the top of the list. You're not going to piss anybody off because nobody's going to know. You just walk in and pick it up. It's beautiful. It's seamless.
Right.
And then figure out how to make a wine bar at night to utilize the space.
What's that website? Giveashare.com. This is the website, guys, if you want to buy a physical one.
Get a share or giveashare.com.
I still have the one Derek got me, the Tesla one. So there we go. There's Tesla.
I like it.
His quote was, hey, Amit, go fuck yourself. So that was because he lost the bet.
That's great.
That was his quote. Your quote was a little different on your side. All right, Steve. What you got going on the weekend? Anything special?
I got to start writing, man. I got to crank out 3 or 4 articles this weekend.
I don't get how you write this much, dude. That's a lot of writing, but you love
this is when I do my Seeking Alpha work. Friday night, I write an article. Saturday, I try to write 1 or 2, and then Sundays,
But what is a typical Saturday morning? Like, do you wake up and like go get breakfast somewhere, or like what do you do in the mornings on Saturday?
I wake up, I drink coffee, I write.
Okay, but like, when do you and the wife like go out to eat on
She
weekends
works
at
on
all?
Saturdays.
Oh, she works. Okay.
Well,
so
not
you
as
get
much
to yourself.
anymore. But, I mean, she still has to log in and do stuff. So,
Gotcha. All right. So I did ask on Twitter. Last question: what new show should I watch? Have you seen Prison Break yet? Have you started?
I don't like it. I didn't get into it.
Okay. Well,
can you just watch Industry? You know that I know what your personality is like. Just watch Industry, please.
Yes, I wanted to ask the chat. I got a lot of comments yesterday on that post. Everyone was saying Ozark, and Steve said, "Fuck Ozark." He said Ozark is horrible.
Yeah, it's overrated.
So Industry, that's your pick of the new show to start.
Yes.
But
play
because
play the trailer from season 1.
If I play the trailer, we're fucked, dude.
Really?
It's a ruthless competition game with these big media companies.
From HBO, they're really going to care?
Oh, 100%. HBO will take every last penny.
You're promoting their product.
That's what I think. But I have never copyright striked anyone who's like reacted to my videos ever. But like HBO is a different animal. But
this is up your alley.
What do you say?
This is up your alley. Don't watch Succession. Succession's overrated. It's a great show in its respect, but it's too slow, and they could have cut a third of that show off, and it would have been better. Industry's light years better.
I've watched Breaking Bad. Someone said Sopranos. I haven't watched that yet. I need to. Punisher. I don't know what that is. I haven't seen Game of Thrones ever. I need a show like Prison Break distracted me from reality, and like I need that in the night. And I need a show that can actually get me back to being distracted from reality.
Will watching something about the stock market distract you or not?
No. It can be about the stock market. It just still has to be,
So watch Industry. You'll be distracted.
Oh, I've seen Beef. Beef. Have you seen Beef?
I'll give you a list of shows, okay? And I am like, in my own mind, a critic for TV shows. I love TV shows. You want to go down a rabbit hole, watch Curse of Oak Island. Not for everybody. It's reality TV. It is about see if you can play that trailer. That is from the History Channel. You go down a rabbit hole on that. I've been watching that for a decade. It's fascinating. But don't watch Sopranos because it's not going to hold me. It's one of the greatest shows ever made. It changed TV, but I rewatched it so many times that I'm probably just desensitized to it. So yeah, go watch Sopranos. You watch Entourage?
No, I haven't seen that.
You never watch Entourage?
Nope.
Okay. Put industry to the side. Go watch Entourage.
Is that a new show or an old show?
Old.
Okay, I'll watch Entourage.
Watch Entourage or watch Ballers. Ballers was good.
What about Lost? A lot of people said Lost.
No. Watch
No?
24 before Lost.
I've seen House of
24
Cards.
is amazing.
Mayor of Easttown. Have you seen that one?
It's all right. You watch Sons of Anarchy?
No.
Oh, no. Seriously?
Dude, it's called Sons of Anarchy. Anarchy is about rejecting the government. Like, how exciting.
Sons of Anarchy is one of the best shows ever made.
What about Stranger Things? Have you seen that?
Hmm?
Stranger Things. Have you seen that?
I mean, I saw it. I think it's overrated.
Billions, I thought was overrated as well.
Billions is amazing. Don't say that. Entourage would be great for you. It is. Half-hour episodes, funny as hell, just really great. You'll love
Wait,
it.
what year did it come out? Entourage show?
2002,
2004?
Yeah,
2004?
that's all right.
All right. Entourage is on the list with
See, I'll agree with Homeland if you really want to invest time into it. It's not as quick as Entourage. And Entourage you can rewatch anytime you want, any episode.
Have you seen Game of
Have you
Thrones?
seen it? Yeah. So I'm going to piss a lot of people off with this. I read the Game of Thrones books, A Song of Fire and Ice, before this was even a thing. Okay. So I had already read the Old English dialect. Okay. I'm not going to say that because I'm not going to give that away. But let's just say that I was very involved in it. Loved it. I am still waiting a decade later for George R. R. Martin to finish his next book. I'm convinced he's never going to finish it. And I think the series could have been better. I think.
Why aren't you watching House of Dragon then? Why aren't you watching House of Dragon?
Sucks. Horrible. It is so bad. Oh my God.
Okay. All right.
Very House of the Dragon is unwatchable for me.
Yeah, a lot of people have been liking that show, but I know it's a preview
so
to
bad.
Game of Thrones.
And Game of Thrones was great, but they could have sped it up a little bit. Too much building stuff up. The books were way better. But what does that even mean?
Is it don't
House
trust
of the Dragon is great. Get the hell out of here. So bad.
I think I'll do
It
industry.
is
I'll
so
start industry.
bad.
I'll do industry.
But
All
yeah,
right.
Entourage, you'll like Entourage. Watch 24. 24 is good. And
Okay.
can you watch Tombstone so you can understand all the gifts I send you, please?
Yes, I'll try to finish that this weekend, dude. I need to.
Did you
get that
start
out.
it?
No, I didn't try it.
So how can you try to finish it if you didn't even start it? Like, I don't get it. What are you doing?
I meant to say I'll try to start it and finish it.
Well, but that's not what you said. You said you'll try to finish it, acting like you started it. Like, I don't know.
Dude, I
good.
get so distracted, dude. I tried to watch Back to the Future Part 3 last night. After 2 minutes, I was like, this is boring.
Why?
I
Why would you
got
do
bored. I got bored, bro. Like, I got bored. Like,
Did you watch Molly's Game yet?
No, I didn't see. I tried, dude. It was boring the first 5 minutes. I was like, this is not exciting, dude. Like, this is.
Yeah, because you freaking were watching the very beginning when they showed her skiing and why she didn't make the Olympic team.
Yeah, I'm like, why is this bitch skiing, dude? Get to the plot.
Okay,
Like,
you
I'm
could
like,
have
what's going
fast
on?
forwarded 5 minutes if you didn't want to watch that.
This is why Twitter's perfect. You spend 2 seconds on a tweet, you move on. A show requires so much commitment, bro. Like, Maybe I have commitment issues, dude. Maybe that's the internal
Molly's game is freaking
therapy
great.
that's happening.
Did you like Rounders?
Oh, I love Rounders, but I tried watching it again.
You'll love Molly's game.
But see, I couldn't get through Rounders the second time around because I got bored. Like, I get bored very easily when I'm watching stuff, bro. It's tough.
Oh,
it's weird.
Like, did you see Margin Call?
Yeah, that was boring.
Did you see Boiler Room?
No, but The Big Short I think is better than all of them. The Big Short is amazing. Yeah, I didn't.
Big Short was amazing.
I thought Big Short was great. It was great.
You'd like Boiler Room.
All right, so industry. I'll start that.
Industry.
Yeah.
In Entourage. Just get after it.
All right, Steve. Thank you again. Thank you, everybody, for joining us on a Friday. We'll be back next week. Next week's a big week. We've got NVIDIA.
Oh, did All In drop yet? I need to watch that. Yeah.
Probably. I'm sure they probably are out by now.
Maybe I'll watch it tomorrow.
All right. Thank you, everybody. It's been a fun week. Palantir Weekly, 11 p.m. Matt, Amir, and I will be on to cover Palantir in about 6 hours. And
if I'm awake, maybe I'll come on.
Okay. Yeah, I'll send you the link if you're there. And then tomorrow I'm doing another Palantir stream at 11 a.m. with Adam Gokarp, who's dug up a ton of government deals, DD. So we'll talk about that. And then Sunday we'll be back for the future show. And then Monday we'll be back 8:45 for the market open. All right. Thank you, everybody. Have a good one. And we'll see you guys later tonight and next week. Bye, everyone. Have a good one.
Later. So